Greetings. Today I came back from another road trip. I went to this province, not the exact same place. This picture is actually from one of my last trips to the same province. In my next market recap, I'll try to share some pictures of today's trip. When I go around to these places and take pictures, I observe the surrounding, observe the light, observe the subject and subjects and take the picture, and I cannot but realize the similarity in trading and in photography. And probably that similarity or those similarities exist in any area of life where we want to do well. None of us gets proficient in trading in one day. We need practice. We need to understand the market. We need to also understand ourselves, how we react to the market, how we manage risk, etc. And when I realized the similarity, I pondered about one thing. I usually do not share many trading ideas in the market recaps. Today is probably even more so. So let me share my pondering about trading a bit and what made my trading profitable consistently so and what may help others as well. Suppose you are new to trading or you are trading for a few years but think that you have not achieved your full potential. Full potential in what? Full potential in terms of profitability and consistency of that profitability. And suppose there are two of you. Rest assured, there are many more than two of us. Should you indeed fall in such a category where you feel you have not fulfilled your full potential in trading profitably. Also, rest assured even more that we all have passed through that stage one year or other, probably for several years. Now, this is the question to ponder about how we go beyond those initial 1 year or a few years. Who makes a better trader? Remember, it is about two people starting to learn about trading. Who makes a better trader? A person who can buy every trading system in the world, or the other trader who can afford only one, a robust one, a reliable one, but only one, and spends the time to look at the market, at the stocks using that system day in and day out, instead of looking at the often conflicting signals from so many systems like the other trader does. I'll guess that if both of them are beginning traders, the person with a single robust, reliable trading system would learn about trading faster. I am in that category. I don't go for new platforms that come out in the market. I sometimes look at other systems, but I stick with my own trading system. I use the same techniques using the same systems for many years. I may fine tune them a bit over time, sometimes to improve the usability, sometimes to add a feature or two to help in my own trading. And those are based on input from other experienced and profitable traders and also from my own experience as I use the systems every day. Using that single system using its techniques simplifies my life. I focus more on the market. I am more in tune with the market. And more often than not, I have a higher success rate in swing trading than many others. I use the same systems every day. I use the same old and proven systems today as well. Greetings. I am Sagar Nandi, retired information technology professional, swing trading stocks for a living. I copied that phrase from Dr. Alexander Elder. I trade in the USA market as well as Indian market. Use the single system and techniques. You may contact me using my email ID info@superiorprofit.co and tradingprofitably@gmail.com, any one of them. I regularly share live market and stock analysis on my website superiorprofit.co, X handle Superior Profit, and YouTube channel Trading Profitably. All these are open to the public and you are most welcome to make use of them. And I mentioned that my swing trading success rate tends to be better than others. That is based on the outcome of the trades that I share publicly always before knowing the results. I share them on these channels. And why the success rate is better? One thing is because I use only one system, the signals cannot be conflicting on that single system. And the other thing is that that single system Q allows me to look at multiple dimensions, all the dimensions in my view of importance: technical analysis, market analysis, sector industry rotation analysis, fundamental analysis, and even seasonality analysis. I look at all of them in real time using extremely reliable definitive data and then come to a conclusion whether to buy in the current market or sell, that is short, or to stand aside. If I want to buy, then I want to buy stocks in strong sector industry with strong fundamental with a proper buy setup. Sometimes I may even consider seasonality if I have that in my favor. Opposite I do for a weak market. Because I combine all these dimensions in favor of my trades, they tend to be truly high probability trades as the outcome of my shared ideas show. I'll use the same techniques today, but I'm not sure I'll look at many trades because I don't think the market is in a place where I like to take many trades today. We'll look at the market though. I have not looked at it in detail, doing it live. Before I look at the market, of course, disclaimer, this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. Options trading can be risky, don't have to be, but can be. You may refer to the characteristics and risks of standardized options document from OCC to decide if options trading is suitable for you. And as I mentioned earlier, will you really find out only from this document if options trading is suitable for you? At least I don't think so. You have to actually trade options, hopefully manage risk so that you don't lose a lot of money before figuring out how options trading can help you. And if you see it is not helping you, it's probably better to stay away from that. I use the Q systems and only Q systems. They run on Metastock platform and the technical analysis component runs on TradeStation as well. That was the last slide. Let's continue with the live systems. First a look at dollar. Isn't it amazing that dollar stopped right at the trend line support? And if you look back to my earlier market recaps, when it came to the trend line support in weekly, I mentioned that it would be not easy for dollar to break through all those supports in one go. It did not. It nicely bounced from the trend line support, and where did it stop? Right at the trend line resistance. And that is again why if you are using these trend lines, you take it seriously as I do. Now dollar is in an uptrend in daily, is at a resistance in weekly. There is no short trade possible. If I was trading dollar index, it cannot be traded, probably it's an index, but if it was a tradable instrument, I will not be able to short it because it is still in an uptrend and there is no reversal short setup. There are some signals but no short setup, so I will not short it and I will not buy it also because there is a trend line resistance nearby, so I will wait. Dollar is in an uptrend. On Friday, if you notice, it tried to go up but closed with a doji candle, almost probably at the same price as opening price, with a bearish indecision. So as far as Friday's candle is concerned, it is not bullish. Yes, it is in an uptrend, but Friday's candle is not bullish at all. Now, as I mentioned earlier, I am looking at dollar, but I don't rely so much on intermarket analysis. That is, I am not looking at dollar to decide where the stock market is going. I look at the stock market, and I mentioned also that dollar and market has tendency to be correlated. Dollar going up may be bad for the market, dollar coming down may be good for the market, but that does not work all the time. It did not work in recent days because dollar was going up, but market also was going up. And on Friday, dollar looks bearish on that day's candle. But how was the market on Friday? Let's find out. Was market bullish? Let's look at IWM. IWM is on the screen, and I switched from Q Global on Metastock to Q Elite on TradeStation. As I mentioned, the technical analysis is available on TradeStation as well. So let's use both the systems. If we just look on the last candle, Friday's candle, that is also bearish for IWM. Bearish in shape, has a bearish indecision. So dollar was looking bearish on Friday, IWM was also looking bearish. That inverse correlation didn't work on Friday. It didn't work last few days also. As I mentioned, market was going up, but dollar was also going up. For the week, IWM went up. That was the expectation I had, and that was the expectation I shared in the previous market recap, because right at that time IWM broke out of daily resistance trend line and it had weekly support trend line 1 week ago. So it went up, however it closed with a very indecisive shape candle in terms of having very long upper tail and even longer lower tail. Very indecisive candle with strong up moves and some down moves as well. And that is happening while it is approaching the previous high. We also have bearish indecision in daily. Not a place I'd like to buy many stocks. I would also not be able to short because trend line support is very close. Remember how the trend lines worked in case of dollar? They tend to work quite well in all instruments. So I'm not able to buy, not able to short. What about industrials? DIA. Weekly again catches attention immediately. Very indecisive shape candle with long upper and lower tail. With such indecision at or near all-time high for Dia is not a time to buy in my view. Also, Dia is hugely underperforming the market shown by relative performance trending down. However, we cannot short also, not until this trend line support is broken. So not able to buy, not able to short. See, I told you that this week I will have even less things to talk about trades. QQQ also indecisive but more bearish than IWM and Dia. Slightly more bearish than IWM and Dia. And I am not able to short now, but we will be able to short. I will be able to short very soon if this trend line support is broken. This support is very close to Friday's close. So if that support is broken, which may happen on the first trading day of next week, maybe I will keep an eye on that, and that will make me look for QQQ constituents for shorting opportunities. Also maybe breakdown setup or maybe other trade setups, but not yet. Not able to buy, no buy setup near all-time high, cannot short, has trend line support. SPY. Interestingly, SPY has bearish headwind in both weekly and daily. Not a time I'd like to buy. They coming in one interval is significant enough. They coming in two major intervals at the same time is even more reason not to buy. Also look at the candle shape, very indecisive once again. And if you think because of the long lower tail it is bullish, that is not true. That is not true when we are at or near all-time high. That time that long lower tail candle just says it is indecisive. It does not say it is bullish candle. At the same time, I am not able to short because we have a trend line support nearby. If you remember the pictures of the four market ETFs, you would notice, as I mentioned, for QQQ the trend line support is closest. So QQQ may give me the first shorting opportunity in constituent stocks if market comes down next week. That's an if. It has not come down yet, so I am not able to take shorts yet. I look at the other aspects of market, but as I do often, let's look at the few stocks I mentioned in last market recap. And maybe I have posted some since then. HTZ, HARJ. I mentioned it in a market recap several days ago. And in the last market recap, I mentioned that right at this point, when after earnings results was announced, I think before market open, BMO, it fell down but recovered rapidly, and I had shorted the put and I booked profit at about 50% plus on the short put, and I actually bought some stocks. That is what I mentioned in the last market recap. And I also mentioned that if it comes down, my stop would be below the recent low and I would not hold it long term. Arch does not have dividend yield. So this is not one of the stocks that I would like to hold long term. I took a chance. I made an intraday trade using short put, made some good profit. I bought some stocks, but I was not ready to hold it, not ready to give it long leash, as one would say, if it hit the stop. And the stop was hit, in fact, you can see from the Q protection signal on this day. That was 13th February. Tuesday. The stop was hit on Tuesday and I was out of the stock position. I sized my position carefully, so probably I closed the entire trade with a small profit. It would not matter if I took a small trade loss in the trade. That's part of the game. So Harch, I'm out of it. I'm not looking to take any new entry in Harch right now. And another thing that I observed, what I mentioned in the last couple of market recaps, two types of stocks I was predominantly buying. If you notice my recent ideas, all of them were on the long side. I didn't share any short ideas, though the market was very high, and I mentioned market was very high overbought, but still I shared only long ideas. Those were of two kinds. One was dividend paying stocks, high dividend paying stocks, and I plan to hold them longer. And those dividend paying stocks I was buying at a relatively low price, like price extreme low level, as it was starting to go up. So I had some cushion from dividend yield. And the other kind of stocks that I was buying, those were showing some signs of life after their recent earnings announcement. Harch was one such stock. It showed some sign of life because gap down at the open but recovered very nicely on that day. So I took a chance in that stock, but I stopped out. Now I traded a few other stocks also. I don't share every stock that I trade publicly, but I noticed that the stocks that were showing signs of life after earnings, they didn't make a huge rally. It could be just my bad luck, but it could also be a pattern. So that makes me less willing now to keep buying such stocks. So I have slowed down on buying the stocks that are not at least not the non-dividend paying stocks. I am not buying so much now, even if they are showing signs of life. Am I buying? Yes, I am probably buying some, but I am buying less than I was buying last week. Another stock I shared on my website forum. If you go to my website superiorprofit.co forum, under 360 degrees ideas category, I shared some ideas here with detailed analysis 360 degrees, and I also share on my X handle Superior Profit. So CRL is a stock I shared on X, and I'd like to mention what I shared. And if you are following me regularly, you would know what is my trading style. What I shared on this day, February 14th, after market close, I shared that CRL, Charles River Labs, I think Charles River Labs, CRL, had an excellent looking breakout in weekly as well as daily. And I think the breakout happened after earnings. However, if you follow me, this is not my style of trade. Why? Because it is already up a lot and my stop would be far below. It was not a gap up open, so I could not place stop below the breakout candle slow. And even if I could, even if it was a breakout gap move on that day, still the stop would be too far to my liking. There are other breakout traders, they could consider it, but I wouldn't. And I wanted to point out few other reasons why this is not my style of stock. One of them was that it was already approaching jump thrust high. I don't like to chase stocks. I started trading 25-30 years ago after reading a book of Dr. Alexander Elder, and if I remember correctly, he mentioned about this greater fool theory. People, traders who buy a stock at a very high price thinking other foolish traders will buy it back from them at an even higher price. So somehow that stuck with me. That might be one reason. Another reason maybe my humble upbringing. I am used to buy things at value, so I find it difficult to chase stocks. So this would not be my style. And I also looked at the Q signal at or near jump thrust high. That is a place I may start to look for shorting setup, not buying. Went into price extreme high. That is not a time I'd like to buy. And big move up 3, I love it when it happens at price extreme low. When it is at price extreme high, it is certainly very bullish, but that does not give me confidence to buy. It is also overbought. So this was not my style. This was not my style of stock for last couple of weeks, not in the current. Remember though, we have to keep the market in the context. The market is at or near all-time high. If the market was near 52-week low, then I would be quite willing to buy a stock like this. When the market is at 52-week low or multi-year low, and then a stock is breaking out before the market is breaking out, I'm very happy to buy that kind of stock. That will tend to be high growth stock. This was after earnings, so it may be high growth stock as well. We can look at that from the vital scorecard. But the context is different now. We are not near 52-week low. We are not near multi-year low. We are at all-time high. That is not a time I am looking to buy breakouts like this where the stop is so far. It gave certain number of trade setups. Industry strength was there. Fundamentally, it was all right. But notice the one question I asked in the tweet. I asked it myself. Plenty of bullish momentum, several buy setups, breakout in weekly, daily. Question is your preferred trading direction for the market bullish now or bearish or stand aside? Clarity on that is important to trade profitably and consistently. Remember, just having a trading system does not make us consistently profitable. We have to look at the forest and look at the trees, assimilate everything and make a decision. Make a low risk trade and see how that plays out and do the same thing over and over. Just like taking photographs, just having a nice camera does not make a great photograph. We have to see the picture and know how to. We need a camera, we need a good trading system, but that is not enough. One of the things that we better learn, probably must learn to be consistently profitable is the clarity on this question. What is your preferred trading direction? That is not what the market direction is. Currently, market direction is bullish, no question about it. When the market is at or near all-time high, there is no other way to explain the market than to say or describe the market than to say that it is bullish. That does not mean that your or my preferred trading direction has to be bullish. Mine is not. And as I looked at the multiple market ETFs, I explained why it is not bullish for me, but it is not bearish for me also. And when I applied that very important criteria, that told me that CRL is not a stock to buy for my style. But I did buy one stock last week also, and I shared that also. That I shared, I think that was the one, not on Twitter. On Twitter also, but I shared the detail on my forum. APA, an energy stock. Let's look at that. It's always good to look at the exact analysis I shared because that analysis was shared before knowing the results. When I shared it on 15th Feb, the industry, oil and gas exploration and production, was one of the strongest, top 20% score, one of the most accelerating, top 20% pace, and the industry was up by a huge 4%. That was a turnaround industry. I love to buy turnaround stocks. I love to buy turnaround industries as well. Turnaround markets. That does not happen so often, but I would love to buy that also. So the industry was telling that go ahead and look for a stock to buy. And I found this stock APA, undervalued stock. That is enough for me to buy. A stock at a low price level is expected to be undervalued. Very seldom it will be high growth stock, as was in this case. The stock itself was also up by 4.8% on that day. It had a short squeeze potential, robust earnings quality. Earnings is not over yet. It's coming soon, 21st Feb. That has to be kept in mind when deciding what instrument you choose to trade it if you want to trade. It has a not very high but not negligible also dividend yield of 3.3%. And I noticed from the vital graphs that the earnings per share year over year quarterly earnings graph starting to tilt up, and the same is happening for revenue also, year over year quarterly revenue. That uptrend is healthy for me to buy a stock. The stock was also, if you notice all the things, very close to 52-week low. So I am buying a low price stock. Low price is about $31 stock at price extreme low. The weekly was looking like this. It had multiple bottom, one, two, three, four bottom. At the fourth bottom, creating a false downside breakout that is even more powerful than a simple multi-bottom. So we had quad bottom with a bullish headwind, bull release, bullish backdrop, and a bullish reversal candle in weekly with high volume in the weekly. Daily, breaking out from trendline resistance with a false downside breakout at triple bottom with also a bullish headwind, big move up 3. Remember the stock I looked at earlier, CRL, Charles River Lab, that had big move up 3 at price extreme high. And I mentioned that was very bullish, but I was not keen to buy. Big move up 3 at price extreme high. But this one has big move up 3 at price extreme low and reversing. If you notice carefully the subtle change in color, price extreme low and reversing with big move up 3 with bullish pressure with high and ascending volume with a breakout in daily, and we saw in weekly has long-term support. So long-term support in weekly, breakout in daily. Undervalued stock in a strong turnaround industry. It had a breakout long setup. It also had a price extreme low pattern and bullish fan out pattern. That was enough for me to take a stock long position in APA. So that was a stock I bought last week and I shared it. After that, I think the stock is up little bit. I shared it on this day. Next day, Friday, it is up little bit. Weekly is remaining bullish. Earnings is on 21st. So if price is at or near the trendline resistance on 21st, I may consider closing the trade or turn it into a vertical options trade. Currently, I have a stock long position in the stock. If it comes down before earnings, goes below recent low, then I will get stopped out into the stock long position. It is not a vertical strategy, so it is not a defined risk strategy, so I will not hold it if the stop is hit. If I traded it with a short put vertical, then I would not have to worry about getting stopped out because that in itself would be a defined risk strategy. But I bought it using a stock. We'll see how it goes. It is an energy stock, so let's look at oil. I don't look at the commodities every day in the market recap, though in my trading I do look at them. Interestingly, and I think amazingly, if you look back my YouTube videos, right when it was near the weekly supports, I mentioned that would be the time to consider buying oil. I don't trade commodities, I didn't trade it, but since then oil is going up slowly. It's not moving straight up down, but slowly going up. And now we can see in daily we have multiple trend line supports. Trend line resistance is far away, so it is uptrending now. Another thing came to my notice now, that the bullish headwind here caught the very low. The bullish headwind here came near the low of a swing move up. Both of them could be used to trade profitably for swing trading. In any case, I came here to notice how oil is doing. Oil is starting to go up. That also supports the move of APA. Now remember, I mentioned that trading is not only about the trading system. That is useful, but we have to learn to read the market from the trading system. We have to apply it. And when we buy a stock, when I buy a stock, I try to know a little bit at least about the stock. APA. You can see there was a gap down move here, and since then it continued to move down. Sometimes, not always. I'm swing trading, short term trading, and I'm not putting a lot of money in an individual trade. I'm managing my risk well, so I don't do that detailed analysis all the time. But this time I happen to look at the reason of this drop. Just the day before, it closed with a bullish shape candle. Very next day it opened with a huge gap down, closed down further, and continued the down move for quite a number of days. That made the stock oversold. The oversold signal went away only at this point. That created a bottom which also had the bullish indecision cluster. One is important, cluster is much more significant. The low created by the bullish indecision cluster has held. Not only held, it was accompanied by bullish headwind, more indecisions, and a bull release. So this low is holding. That is what I mean by having a trading system is not enough. We have to actually learn to look at the market, at the stocks using it. This level seems to be holding quite well. And now you can see, I think I bought it at the perfect day. When I shared it, that was the perfect day. Now coming back, this down move was bit surprising. Why did it suddenly move down? The reason was on that day they announced, if I read the news correctly of that period, they announced that they acquired another large company. Now the other large company also appeared to me to be a profitable company, not a loss making company. So in any case, some people must have or might have not liked that merger news. Price came down, but now it seems the selling has subsided, at least for now. And for now is all that is important to me for short term swing trading buy. So I bought the stock here, and I came to this incident. I read about why it had a surprising gap down, and since then price came down, is because I noticed it and I did some research on why it happened like that. Trading profitably and consistently is not only about having a trading system, but knowing at least a little bit about the stock you are trading. If you could, if you are risking too little money in a trade, probably it doesn't matter. But if you have the systems, and I have the systems to study that from Icon or Zenith, so I looked it up. I usually look it up only when I see something interesting, something unusual in the chart. If it is a regular chart, I might not look that up. In any case, I took a long position in APA. I'm holding the stock long position. And I also explained how I plan to manage the trade. Now, let's look at the market from other angles. Let's look at market internals. Market internals I look at from multiple dimensions. One is sector, industry, stock, breadth. That is actually bullish over 5-day period. We saw the market ETFs, the external view is also bullish. There is no way to consider shorting stocks unless at least some of those trend line supports in market ETFs are broken. That is not broken yet, and the sector, industry, stock breadth is also bullish over 5-day period, but it has weakened over 2-day, and on Friday it has weakened a lot. So QH is telling us to get ready to short the very top of the market. Not yet, the trend line supports are not broken yet, but telling us that we may as well start to get ready to short. Not yet though. If we look at the bucket analysis, it's not overbought, not oversold, can go either way. Overall, it is bullish. So from every angle, it is bullish. We have some weakness on Friday. That's just one day. We have to at least wait for some trend line breakout. And if I look at the technical breadth, another very useful guide of market internals, weekly period is bullish here also. We have some weakness in the reversals, but still the absolute number of reversals on bearish side are less than on the strength side or trend continuation side. So overall, we have to say weekly period technical breadth is also bullish. Friday is showing some weakness. So again, that's a sign that is telling us to probably start to get ready to short, but not short yet. And what about market internal health check from market total view? That always tells an interesting story. Let's look at that. In the last several market recaps, I pointed to the Hindenburg cluster. Last market recap, I mentioned that both NYSE and Nasdaq had fired the Hindenburg, and of course, it also fired the Bango signal, irrational exuberance. The signal itself was invented by Mr. Ian Woodward, may him rest in peace. Irrational exuberance with Hindenburg cluster, time to be cautious. I mentioned also in the last market recap, time to be cautious but not time to short, because it is still in an uptrend as far as even the total view candle chart is concerned. Now I noticed one thing, and this is again coming to learn to use the system to read the market, not just have a system. With all these warnings from Hindenburg and Bango, we had a sizable down day on this day. Why sizable? I'm looking back for the entire screen length, which covers from July 2023. If I am reading correctly, I'm reading it quite fast. That was the only day we had a distribution count of 5. That is a pretty weak move at or near all-time high of a market. Very weak move. The weakest move for this entire period. That was concerning. Now after that, market rallied quite well, but see the accumulation count, not even significant. For accumulation count to be significant, it has to be green color. Yellow color is not significant. We had only yellow, insignificant accumulation counts on the move up. The move up was actually quite rapid from this 5 distribution count down day, but Again, I'm having the system and I'm learning, I'm showing how to use the system. They are not the same thing. The up move was significant after the down move, but under the hood, it was very feeble up move. That was keeping me away from the market, less willing to buy now, not even the stocks that are at price extreme low showing signs of strength after earnings. Dividend paying stocks are different, and APA I made an exception looking at the turnaround situation of the industry. Not very keen to buy many stocks now. Not not really ready to short also. So I'll not let me not look at stocks. Instead, I point to few changes that I am making. I mentioned I don't change the trading system at all, and the same system I don't make many changes nowadays. But I did make one change. That is actually two changes. None of them are released yet. One is this color codification of the, let me run something on Vital in parallel. The color codification of the stock scorecard. This column, it shows which stocks are small cap, orange color, which are mid cap, yellow color, large cap, green color, and mega cap will be cyan color if we can find some. Yes, mega cap. That is using certain market cap range. Different systems, different platforms, different websites have different ranges for small cap, mid cap, large cap, mega cap. I used one of the acceptable ranges. So if I see how I use it, if I see in the market percentage move chart, that is a real-time chart, now it will be realigned to 0, but let me still open it. In real time, every day I keep an eye on which pocket of the market is strongest, which one is the weakest. I like to buy in the strongest pocket, short the weakest pocket. And one way to know of those pockets from that is from Q edge, and another is from this market percentage chart. So on this day, for example, that was Thursday, right off the bat, right after open, Russell 2000 was strongest by far. It closed the day almost at 2.5 something percentage, but right from the beginning it was the strongest. So if I was looking to buy stocks, I would prefer to buy small caps on such a day. Again, that is not the only way to choose my buy candidates, not for me at least, but that is one thing I look at. And when I was looking at that, I thought of color coding the stocks in scorecard, so instantly I know which ones are small cap. So if I sort by real time percentage move in scorecard, I would probably favor or prioritizing looking at the small caps on such a day. With that thought, I color coded the scorecard that is available also in Vital, the same thing. Retrieving the data. The other change that I made that I had thought of doing for a long time was to implement the concept of box stocks, but implement it in real time. Box stocks, thanks to Mr. Ian Woodward again. May him rest in peace. I never met Mr. Ian Woodward. I came to know about these concepts from Dr. Jeffrey's videos and attending his training session. So thanks to Dr. Jeffrey as well. I'll not go into the detailed concept of box stock. The idea is to find the best of the best growth stocks by categorizing them into 10 boxes, 1 to 10. How? By looking at their 5-year earnings growth and the average of last 2 years earnings growth. Sorry, yeah, 5 years earnings growth. That is long-term earnings growth and last 2 quarters average earnings growth. So combining the long term as well as the short term. Those are box stocks. One is highest growth, and then 1, 2, 3, 4, 9, 10 is another category. All are proven to be better in terms of outperforming the market, as Mr. Ian Woodward's and his trading group studies had shown. That was an interesting and meaningful and sensible concept. So I thought about implementing it, and I wanted to do it in real time. Just like Q, everything is real time. I am not going to store a list of box stocks. Initially, in fact, I thought about doing that. So if you remember one of my Q Vital Universe tabs, in one of the releases, I had a series of blank columns for box 1 to 10, not this version. At that time, I was still trying to think about how to implement the box stocks, but now I have finalized that and I wanted to make it fully real time. So I don't store it in the universe tab. The universe tab is for storing data that I don't need to calculate every day, like the list of liquid options, the market leaders, the bullish seasonality stocks. They don't change for a month. Or the list of liquid stocks I'd like to buy, the list of India stock futures. I don't need to calculate them every day. These are my universe. But among the universe of stocks, using the Q stock scorecard, I can find the strongest of the stocks in terms of valuation, in terms of earnings growth, in terms of revenue growth. Or I could use the combo filters for diamond, 3 star, 1 star. Now I have another way to find the stocks in real time, that is using box stock. So whenever I have a Q scorecard generated, simply I hit the box stock. It shows me all the stocks that belong to one of those categories, and whether in real time or one day, I can then sort them by percentage move and see which ones are moving. Now, as per Mr. Ian Woodward's study and Dr. Jeffrey's teaching, box stocks can be traded anytime. However, the best time is probably to look for box stocks breaking out when the market is at a low price level. Market is certainly not at a low price level, so I am not going to buy them, but anyway, I kept them ready so that when the time is right, I have real time access to the box stocks. So what you may do is define your trading universe. Usually that will be a liquid stock list, or if you are trading only options, it could be stocks with liquid options. I think most of the Q traders, if not all of them, they also trade stocks. It will probably a liquid stock list. Some people want to avoid low price stocks, so it could be a mid price and high price stock list, maybe a combined list of non-low price liquid stocks. You could generate a stock scorecard of that. I'm not doing that now. This will be coming in Vital, but in Edge also the same scorecard is there. Once you generate the scorecard, just click the box smart filter. It will show you the box stocks sorted by current day's performance. So you will know which box stocks are moving. And interestingly, I notice KNSL, I'm doing it live by the way. I see one box 5 stock. I'm not going into the definition of the boxes. That was created by Mr. Ian Woodward. If you would like to know more, you may join one of the training classes that Dr. Jeffrey organizes from time to time. I'm not going to take classes on Mr. Ian Woodward's subjects. It was created, invented by him. Dr. Jeffrey may be a better person because he was studying trading with Mr. Ian Woodward, not me. So you may join Dr. Jeffrey's classes if you are interested to know the exact definitions and how he uses box stocks. He is much more experienced, of course, like other HSI traders, in understanding and actually trading the box stocks. I'm just starting now. In any case, I noticed KNSL is a box 5 stock that hugely went up, probably because of earnings. So why don't we look at this stock today? Again, as I mentioned, in case of Charles River Lab also, that important question is, are we bullish or bearish or standing aside mode? For me, I am not keen to buy many stocks, not at a high price level. And this one is a box stock, box 5 stock. It had a big up move. In fact, it broke out of the recent high of the watermark resistance. But like CRL I showed, this also has already hit jump thrust high, price extreme high, and yes, big move up 3, but big move up 3 at price extreme high, jump thrust high is not a point I'd like to buy. By the way, both for this stock and CRL, I'll be quite happy to buy if they come back to the trend line support and gives me a flow long trade setup. That could be one way, a bounce long setup. It could be a flow long setup. If it comes to the yellow direction line, that could be a pullback setup. So I am very happy to buy if price stops falling in this vicinity, both for this and also for CRL. But I would not like to buy such stocks at jump thrust high, price extreme high in the current market situation. Again, if the context was that the market was at 52-week at or near 52-week low, then I would be happy to look into buying such stocks, but not now. In any case, those were the two changes that I made. They are still beta. I have not released them yet. Once they are released, all that will be needed is to download the latest QEdge and Vital from the download page. I'll announce that on the Twitter page, X page. And by the way, the history of outperformance of box stocks is so amazing that it is worth studying them. You may learn more about them from Dr. Jeffrey's classes, of course, because the history of outperformance of these stocks of the market is by a huge margin. With that, let me end today's session here. I told you I'm not going to look at many stocks. Thanks a lot for attending. I look forward to seeing you in my next class, next YouTube session, probably next weekend. Have a great weekend, and as I always say, as this live example show, I hope they show, there is no reason not to do that, but to trade profitably. Thank you.